Live from London, this is Bloomberg Daybreak Europe. I'm Andy Burnham with your top stories. Tech takes a tumble. Asian stocks fall from record highs, with Nasdaq futures also pointing lower after a session that saw SpaceX slump for a third straight day. Brent crude, meanwhile, holds below $78 a barrel as the US gives Iran a 60-day sanctions waiver to sell oil on the international market. Plus, Coronation Street. Labour MPs in the UK rally around newly elected MP Andy Burnham, paving the way to Downing Street as soon as next month. Well, a very good morning. Welcome to the programme, everybody. 23rd of June today, Tuesday, 10 years since the Brexit vote. We're going to start this morning in Asia because stocks are dropping from that record high as the tech rally cools. The MSCI Asia Pacific Index down 2.3%. As I say, yesterday, stateside, we already saw SpaceX shares slipping for a third day, shedding hundreds of billions of dollars of value. And this morning, Nasdaq futures are down 1.3%. European futures also down nearly 1% on Euro Stoxx 50. Now, if we flip the board over to the cross-asset picture, we can factor in the geopolitics, the latest from the Middle East. Brent is now down 0.4% at $77 a barrel on both Washington and Tehran, citing progress in the first round of talks in Switzerland towards a lasting peace agreement. Treasuries gaining a touch now, but yesterday they fell after that Juneteenth holiday on Friday, as Strategist said that markets were processing that hawkish messaging from the Fed. So now we look ahead to the core PCE number tomorrow. And finally, we've got the yen on the board for you there. 161 per dollar is where we trade, near its lowest level since 1986, as investors weigh the prospects of that US-Iran peace deal. And we have currency traders on alert for yen intervention after that call between the Japanese finance minister and the US Treasury Secretary. Let's take a look at the risk events on the agenda for today. From 8:15 a.m. London time, we'll get global flash PMI numbers. 2:35 p.m. London time, we'll be hearing from the ECB Vice President Boris Vujicic. He'll be speaking alongside later on some Bank of England central governors as well. So we'll be hearing from MPC members Alan Taylor and Swati Dhingra, two of the BOE's doves. A busy day ahead. Let's get started. We begin in Asia with a tech sell-off dragging Asian stocks lower after they came from record highs. And we could go straight to Winnie Su in Hong Kong for more. Winnie, what stands out to you?
Yeah, good morning, Lizzie. Asian stocks really tracking those losses from the U.S. overnight. We're seeing lots of weakness with the MSCI Asia here down more than 2%, and it's in fact seeing its biggest intraday loss in about 2 weeks. Now, the loss is being dragged by South Korea's Kospi index here, extending further losses down more than 6%, as you can see how these leveraged ETFs continue to amplify volatility in the market. Now, when it comes to Chinese stocks listed in Hong Kong, you can see the gauge here down 1.5%, getting close to entering that bear territory. And worth noting that this is, in fact, the world's second worst performing stock gauge so far this year, down about 12% on the lack of AI exposure and also China's weak economic outlook. Now, flip the board, we take a look at the sectoral moves because, as you mentioned, tech stocks leading declines. You have the tech gauge here down 3.7% after 8 days of gains, actually. And you can see losses being led by SK Hynix and Samsung Electronics. Now, we are seeing a bit of overheating in these names, especially after valuations of SK Hynix top that of Samsung Electronics. But overall, a bit of caution ahead of the Micron earnings expected later this week. Now, flip the board, we take a look at the Japanese yen. As you just mentioned, that continued weakness on the back of a stronger U.S. dollar. And now the weakness approaching levels unseen in about 4 decades. 162.7 is the level that we are watching out for. And yes, that intervention risks that we are also closely monitoring after that call between Finance Minister Satsuki Katayama and Scott Bessent, saying that they have agreed to take bold actions if needed on currencies. Now, you can see it hasn't really supported much when it comes to the yen's strength. And also worth noting that the yen is, in fact, the strongest G10 currency so far this month. Back to you, Lizzie.
Winnie, thank you for the update. That's Winnie Su in Hong Kong. Well, you mentioned SpaceX shares slumping for a third straight day. They dropped 16%, shedding hundreds of billions in market value. This after the company said that it was selling investment-grade bonds for the first time. And we can speak now to our Bloomberg senior strategist, Neil Campling. So, Neil, clearly investors unnerved.
The stock obviously had done very well from the IPO. Part of the factors behind the move yesterday was also that at the end of last week, some of the passive funds were positioned into the index positioning, and then on top of that, you then had the fact they're coming back to the market so quickly after raising money through equity to say they're looking for debt investment as well. So it's a very quick move, and it also, I suppose, it highlights the fact that there's a lot of capital required for this company going forward because it's got obviously huge ambitions. A final factor as well, I think, at play is that a lot of the activity around this stock is in the leveraged ETFs, a similar situation to what you've just been talking about going on in some of the Asian names.
Yeah.
But also, I think, in terms of options positioning, a lot of the activity in the options market on SpaceX as a stock are very short-dated. So that's in terms of where investors are making short-term bets on where the stock will move in 2, 3, 4 days, as opposed to in terms of months.
So is it too soon to say the honeymoon's over for SpaceX?
It's well, it's certainly an interesting factor to watch.
Coming back down to earth.
It's obviously opening itself up for many a pun, clearly, Lizzie, obviously. But I suppose the fact is, as far as longer term investors are concerned, I think they buy into that opportunity and what they're trying to do. But for shorter term investors, it's really about momentum, isn't it? In terms of whether that's good or bad, we'll have to wait really until the middle of August until we get to earnings, and then lock-up expiries to get to see what the next moves are. But clearly, volatility is a factor that's going to be at play for this particular stock for quite some time, I think.
I won't make a joke about the bumpy ride then. Neil, thank you for the update. Bloomberg's Neil Campling there. Well, turning to broader markets, Chicago Fed President Austin Goolsbee says that he's concerned that inflation has been going the wrong way, his words, questioning whether all the factors driving prices higher are temporary. Goolsbee described rising services inflation as disturbing and said that pressure there could be more persistent. Let's go to Bloomberg MLive strategist Ven Ram now for more. Good morning, Ven. So how much of a headwind could central bank policy be for markets going forward?
Morning, Lizzie. I think it's going to be a very significant factor going forward because, you've got the Fed where Kevin Walsh's hawkish was pronouncedly hawkish last week. And, the Fed's core PCE has been revised up from 2.7% to 3.3% for this year. That's a significant upward revision. And the Fed needs to be going much higher with those rates. And with the Fed raising rates, you will see European rates and German rates and gilt yields, as well as JGB yields also rising in correlations, partly because the ECB is also raising rates. And the Bank of Japan, of course, has no choice but to continue raising rates because they are hugely behind the curve. Now, we've got all the 4 major central banks raising rates, and that leads you to ask the question, what is going to happen to stocks? Obviously, stocks are going to feel the pressure because they hide the discount rate, and the discount rate stems from the 10-year Treasury yield. If the Fed keeps raising rates and the 10-year Treasury yield keeps going higher, the discount rate applied to stocks is obviously much higher, which will produce lower valuations. And even now, Nasdaq 100 and the S&P are more than fully valued. So I think the stage is ripe for a correction. When exactly it will happen is hard to tell.
OK. And meanwhile, here in the UK, it's looking like Andy Burnham could be walking through the door of Downing Street in just a few weeks' time, Ven. We didn't see a huge amount of market reaction to the political drama yesterday. We did see a bit of relief in markets at the prospect of a faster transition. But as we get more information about a Burnham cabinet, if he's going to be Prime Minister, for example, who is his Chancellor, do you think there's a lot of room for market reaction here?
I definitely think there's plenty of scope for the markets to sell off. particularly if we get a Miliband kind of someone who is left-leaning towards reforms, that kind of person, that kind of a profile will set up 30-year gilts for considerable sell-off. Now, we need to keep in mind that 10 and 30-year gilts are already trading at considerable discount to the Treasury yield and the German yield. So that means that there is a steep discount embedded into gilts, and that will continue to show in the coming days, especially if we get, as I said, if we get someone who is left-leaning towards reform.
Okay, well, we'll wait for speculation on that and hopefully an announcement in the coming days. But for now, Ven Ram, Bloomberg MLive strategist, thank you very much. Well, still ahead on the subject of the UK, it's been 10 years since the Brexit vote. So we'll discuss what the latest political upheaval means for UK assets with Saxo's Neil Wilson. But first, former Mayor of Manchester Andy Burnham returning to Parliament as the overwhelming favourite to become the next Prime Minister. We'll dive into the latest on UK politics next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:13 a.m. here in London. Well, the US is giving Iran a 60-day licence, allowing it to sell oil on the international market. It's an economic lifeline for Tehran as the two sides continue talks on a permanent peace deal. We can go to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar, for more on this. Abir, good morning. How significant is this energy waiver for Iran? And really, what are the key challenges left on the table? Because we're hearing conflicting statements, it seems, from both sides, but oil holding a decline on the signs of progress.
Good morning, Lizzie. Yeah, lots of discrepancies still in place. But when it comes to the waiver, the U.S. Treasury did give a waiver to Iran to export its oil until August 21st, at least. This is the 60-day period in which the negotiations that already commenced on Sunday will carry through until. And so how significant is it is a good question. What we're seeing right now is about 30 million barrels of Iranian oil going through the Strait of Hormuz. And so those are oil barrels that were either blockaded by the U.S. naval blockade that was in place until late last week, and those exports from Kharg Island, which is its main export hub. And so our expectation, or our energy team's expectation, is that once those are done and dusted with, the rate of Iranian oil exports will likely go down. And then our teams point out that 2 million barrels of daily oil exports for Iran was already a high number pre-war. And so it's quite significant for the time being. Iran will be able to sell its oil even to U.S. refineries, theoretically. Now, the EU does have its own sanctions in place, so it's unclear how those oil sales will carry through, but much needed oil supply because of the shutdown that was effectively in place over the past 3-4 months, Lizzie. And when it comes to the negotiations that are taking place in Switzerland this week, we already know that the high-level negotiators, that's J.D. Vance and the Parliament Speaker of Iran, Ghalibaf, are set to go back, and then lower-level negotiators set to continue talking in Switzerland. The discrepancies are really on some of the concessions that were already in place. For example, J.D. Vance says that the discussion on the nuclear weapon has taken place. Iran says no discussions on nuclear have taken place. J.D. Vance says that Iran will use its frozen assets, or the unblocked frozen assets, to buy U.S. agricultural products. Iran hasn't confirmed that. And then the issue of Lebanon continues to be in place. Israel maintains that it's not privy to this MOU and that it will continue tackling Hezbollah in southern Lebanon. And so those issues continue to be in place for the time being. President Trump did say that oil was gushing out of the Strait of Hormuz and that prices are coming down, which to him is a win. He also reiterated Vance's statement about Iran allowing nuclear inspectors to go into the country to inspect those highly enriched uranium the places that hold the highly enriched uranium. Again, Iran says not really. They will be talking to the IAEA with ongoing procedures to sort of have that take place. And so some discrepancies there. We're still waiting for these negotiations to happen. They are continuing to happen in Switzerland. They're set to continue happening into the end of this week at least. So something to keep an eye on. But as you mentioned, the back and forth continues, Lizzie. The only positive thing that we're seeing is that at least oil is making its way through the Strait of Hormuz. A trickle, but still better than the situation that was in place over the past 2-3 months.
Abir, thank you for that latest from the Middle East. That's our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. She'll be back at 5 a.m. London time tomorrow with the show. Well, let's come to the UK now. The former Greater Manchester Mayor Andy Burnham appears set to become the UK's 7th Prime Minister in a decade. The Makerfield MP's path to 10 Downing Street was cleared yesterday when Keir Starmer announced that he would step aside as leader of the Labour Party. Let's go now to our London Bureau Chief, Ruth David, for more. So, Ruth, good morning. Has Starmer hurt Burnham with the timetable for the leadership contest? He set it out at the podium yesterday. Surely there's going to be a vacuum until Burnham's crowned. Do you think that the National Executive Committee of the Labour Party could be persuaded to bring forward that deadline if it is indeed a one-horse race?
I think that's a great question, but the issue is, does Starmer and does the party want to be seen as moving timelines around and going back on the things that they have decided? I thought it was also very interesting. I mean, today, of course, is the 10-year anniversary of Brexit, and we've already seen reports that the European Council leaders said they wanted to postpone the EU-UK summit, which Starmer was going to do. So I completely take your point that at least on a global stage, you might see world leaders and you might see organizations saying, we want to now deal with the new leader of the United Kingdom as opposed to dealing with Starmer. But I think Starmer would probably also want to give any other contender, even though we've heard that there may not be any others, the chance to put their hand up if they would want to do so. And even with this timeline, we could have a new prime minister announced by July 17th, which is a month away, or even less than that, actually.
Yeah, and of course, we've also got the NATO summit on the horizon as well. The other key question, though, for markets is who's going to be Burnham's Chancellor if he's the PM. And I'm wondering if you think Burnham will have told Rachel Reeves outright that it isn't going to be her so that she can decide her next steps. Because I noted she was absent from Downing Street yesterday when I was looking at all the supporters of Keir Starmer when he was resigning yesterday.
Which is ironic given, all the times Keir Starmer has supported Rachel Reeves. I think Burnham has literally had 3 days, right? And the focus was all on whether Starmer would actually say, I'm stepping down, which on Friday, it didn't seem like that was the case. It's very, very... Based on what we are hearing, Rachel Reeves' name has not come out as much as Ed Miliband, who, of course, we've discussed the markets may not be as favorable to, but we're streeting. And yesterday, after he said he's going to back Burnham, that name has come up as a potential chancellor. Shabana Mahmood has come up. And I think that is one thing that investors are going to be very closely watching, right? Who is the next chancellor going to be and what does that mean for policy? Yesterday, we were speaking to some top investors in the UK, and the key thing they said was, we still want to invest in the UK. We still think this is an attractive destination, but we're going to be seeing if there are any policy changes. And if you have a leader who's telegraphing that, I think we're going to then see nervousness, and we're going to then see maybe people saying, well, our pool of capital can go somewhere else. It doesn't have to be in the UK.
Yeah, and Ben Ram telling us earlier on that there is still room for gilt yields to spike if it's, for example, Ed Miliband. Ruth, thank you for your analysis. That's our London Bureau Chief, Ruth David. Well, coming up on Daybreak Europe, ready to roll. Tank maker KNDS prepares to announce its IPO as soon as today. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the European tank maker KNDS is expected to announce its IPO as soon as today in what would be one of the continent's largest listings in years. It comes after France and Germany confirmed a joint governance framework under which both governments would hold equal stakes in the Amsterdam headquartered company. I'm joined now by Charles Capel, Bloomberg's European Equity Capital Markets editor, for more. Morning, Charles.
Good morning.
So what does, first of all, France and Germany's agreement mean for the IPO?
Well, look, it paves the way for it to go ahead. Crucially, this is such an important company to the European rearmament effort, and having this joint ownership by both the French and the German governments means that it can go ahead as a public company with both governments and Europe as a whole confident that it will remain as a European defence company. And it also allows the business itself to really focus itself as a business that's focused on the European rearmament effort. It can fully commit to that as its public identity.
So what kind of valuation are they targeting? Because I'm thinking about the CSG IPO, and I'm looking on my screen at a chart of the price just tanking ever since it listed.
Yeah, valuation has been the really tricky point with this. And CSG obviously listed at a 25 billion euro valuation. It went up to 30 billion euros on its first day of trading. And now it's trading somewhere around 13, 14. And it's and that's the thing that's really been the sticking point, especially when there's been the negotiations between the German government and the family shareholders when they're trying to buy this stake. Because, of course, the family are saying, OK, well, we want to get as much as we possibly can. The German government's saying that we need to get value for taxpayers. At the same time, you've had a sell-off in publicly traded European defence companies, which throughout the year has been slowly bringing this valuation down. It really spiked in January, and then it started to reverse course, which has been making things really, really difficult in those negotiations.
So let's say this IPO comes any minute now, or the announcement of it. What does it mean then for European markets?
Well, look, it means that in equity capital markets for Europe, the first half of the year is going to be bookended by these two massive defence IPOs. And that actually really tells the story of European ECM. It is defence, it is space, it is industrials, it is things connected to AI, data centres and power. Anything else hasn't really come. There are a couple of IPOs in the software space, in maybe the holiday space, in other areas of the market that were expected to come, and they haven't yet emerged. It's really focused on these hard assets so far this year.
Okay, really interesting. Thanks for bringing us that story. That's Charles Capel, Bloomberg's European Equity Capital Markets editor. Now to some other top corporate news we're following for you this morning. Apollo is again limiting withdrawal requests from its largest non-traded private credit fund for retail investors. The asset manager capped withdrawals at 5% of outstanding shares after investors asked to redeem nearly 17%. Elsewhere, Oracle reduced its workforce by 21,000 employees over the last 12 months, a bigger number than previously known. A regulatory filing reveals that global headcount shrank to 141,000 full-time staff, and the company says the adoption and deployment of AI may continue to lead to job losses. So those are some of our top corporate stories this morning. But coming up on Daybreak Europe, in the aftermath of Keir Starmer setting out his resignation timetable, we're going to turn to the latest in UK markets. That conversation coming up next with the Saxo UK investor strategist Neil Wilson. Stay with us. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burdon with your top stories. Tech takes a tumble. Asian stocks fall from record highs, with Nasdaq futures also pointing lower after a session that saw SpaceX slump for a third straight day. Brent crude, meanwhile, holds below $78 a barrel as the US gives Iran a 60-day sanctions waiver to sell oil on the international market. Plus, Coronation Street. Labour MPs in the UK rally around newly elected MP Andy Burnham, paving the way to Downing Street as soon as next month. Well, a very good morning. Welcome to the programme. If you're just joining us, 6:30 a.m. here in London. This is the picture in markets this morning. We've got Asian stocks dropping from a record high as the tech rally cools. European futures also down more than 1%, and Nasdaq futures down 1.5%. After yesterday, we already saw SpaceX shares slipping for a third day, as we discussed with Neil Campling. And today, US futures as a whole pointing lower at this morning. Now, let's turn over to our front pages, and we have the Financial Times leading with the EU's decision to postpone a summit with Britain next month. It says that the move has caused irritation in London as Brussels waits for Andy Burnham's arrival in Downing Street. The Wall Street Journal also leading with the UK this morning, exploring the forces that broke the two-party system. It says that British politics is now utterly maverick. And if we turn over to the Times, they're saying that Andy Burnham will look to boost his economic credentials in a major speech next week, where he's expected to vow to protect the economy and stick to the government's fiscal rules. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Now to some European data, because the Euro area PMI surveys are expected to show a pickup in economic activity when the data drops later on today. As negotiations between the US and Iran provide relief on higher oil prices, markets are going to be looking to see how the conflict has weighed on business sentiment. Here with a preview is our Bloomberg Western Europe economy lead, Zoe Schneeweiss. Good morning, Zoe. Just talk us through what we can expect from this PMI data.
So we get the flash PMIs for Germany, France and the Euro area. A reminder, the number we're looking here are the numbers above or below 50. 50 delineates, above 50 means you're growing, but below 50 mean you're contracting. We've had contractions here from all three of those over the past months, and though all of those numbers are supposed to get edge closer to 50, unfortunately, economists are predicting that we'll stay under 50. As a reminder, the UK at the same time is squarely above 50, so some interesting UK versus Europe dynamics here.
And are we seeing much impact from the US-Iran peace talks in Europe in any of the data that we've had so far, Zoe?
So these will really be the first important ones. The way PMIs work, they have quite a big window normally to survey these purchasing managers. So we do hope that part of them will be after the peace deal emerged. The one thing, though, we have to keep in mind is purchasing managers read the same news we do. As we know, there's so much uncertainty about the whole situation in the Middle East and about Hormuz. So let's see how much they can actually give us and how much they'll actually know if, like us, they're in the dark in a lot of aspects.
Yes, of course, they're glued to Bloomberg TV, aren't they? Bloomberg's Zoe Schneeweiss, thank you very much for that preview. Those numbers coming out throughout the morning. Well, coming back to the UK, the former Mayor of Greater Manchester, Andy Burnham, appears set to become the UK's next Prime Minister following Keir Starmer's resignation yesterday. As the country awaits another transition of premiership, another one, yes, indeed, investors are scrutinising how a Burnham-led government is going to impact the economy and markets. Let's speak now to Saxo UK investor strategist Neil Wilson. Good morning, Neil. Thank you so much for coming on the show early this morning.
Morning.
So what's the best case scenario for markets under a Burnham premiership when he is inevitably going to be just as fiscally squeezed as all his predecessors?
Yeah, so I mean, obviously the market reaction was not massively over the top yesterday. We actually saw a bit of improvement in bond yields and in bank shares, for example, as Wes Streeting announced that he was backing Andy Burnham, and I think that goes to something of where a best case scenario might look, and it might be that you see Burnham, rather than potentially heading off in the direction where he gets everyone that's from his camp to form the cabinet, that he actually seeks to build sort of bridges across the Labour Party, and you actually see a sort of more of a spread of opinion across the Labour Party, and Wes Streeting on the sort of right of that party could be a very positive candidate for the chancellorship. So I think best case scenario might be, in terms of the city, in terms of the markets, someone like Wes Streeting coming in as chancellor. And also, I think if you see a more more creative approach to some of the aspects of fiscal policy. And we are seeing that Andy Burnham's brought in the likes of Richard Hughes or Jim O'Neill. These sort of people that could make a significant impact in terms of the thinking of how they go about fiscal policy. So I think the best case scenario would probably be a chancellor that gets the economy and maybe some more creative thinking around what to do about getting growth going.
But you mentioned Wes Streeting. There's been talk of him looking to potentially go for a wealth tax. Do you think that it really matters to markets how a Burnham premiership raises revenue? As long as he doesn't borrow more, does it matter if he taxes more and spends more and raises taxes?
Yeah, I think how they go about it is important. I think tinkering on the margins of the tax regime has never really worked, and I think that's one of the reasons that Starmer's failed. Really, is a failure to go confidently along certain policy lines. So, as much as anything else, this is about Andy Burnham being able to persuade the Labour Party to go along with him. Which is something that Starmer would repeatedly fail to be able to do, and hence all the U-turns. So, the presentation, the sort of feeling among the Labour MPs is important here, and so how they do the taxation is important. And I think there's maybe going to be a more clear-cut push by Burnham, maybe to potentially even look at raising income tax, for example. So potentially breaking a manifesto pledge, which I think is something that hasn't. He's obviously been careful not to be talking about these sort of things. But I think he's looking at everything. I think he's looking at all potential avenues. Clearly, the market wouldn't particularly appreciate extra borrowing, given the state of the UK's fiscal position. But I think, as I said earlier, there's a potentially a creative way of looking at this. And I think, there's been talk about specific war bonds, for example, to raise money for defence. So that's sort of the way of thinking that I think Andy Burnham's taking, and it's going to have an impact on the market, but we can't say for certain in what direction, because he is capable of doing. He's got a wide menu of options at the moment. I think he's going to be looking at them all.
Well, he hasn't got long, so let's hope he can be creative quickly, Neil. Just turning from fiscal to monetary policy, interesting that you think the market's wrong and the BOE's next move is going to be a cut. Has the politics changed your outlook at all?
I don't think the politics has necessarily changed our outlook. I think we've been looking at this for the last sort of a few weeks and months, and really I think the market was way too swift to price in hikes as a result of the war in the Middle East and the rise in energy prices, and we always felt that was. It wasn't going to spike nearly as much. And the crucial thing is really that the labour market's not where it was in 2022. The demand side is not where it was then in terms of wages and demand for services and so on. So the UK economy is not really in the position, I don't think, to weather those hikes. And I think the divergence in the UK versus the US has been quite interesting as well, because we've seen quite a sharp hawkish pivot in the US, just as markets were starting to, I think, realise that the UK wasn't heading towards a hike quite as quickly. And I do think that the next move is more likely to be a cut, and I know that's not necessarily what's being priced in the forward curve, but I think that's where we're heading. I think it's probably going to be another weight, another potential drag on sterling, as I see popping up the price of cable at the moment.
Okay, really interesting. I also just have to flag the Kospi this morning, Neil, down more than 8%. And it takes me to your thoughts on tech broadly, how you're feeling about tech in global markets.
Yeah. Well, it's been such a hot trade. I think the problem with it is in terms of pricing some of these shares is becoming more difficult, because you've seen such a hot flow of cash into them. And they are, I mean, that market in particular, the South Korean market, is incredibly concentrated in really two shares. So, and they're both incredibly leveraged to the AI trade. So that particular market's a one that does show higher beta to some of the moves elsewhere. If you look at the Nasdaq or whatever. I think in general, tech is still the place where, where are we going to be in 10, 20 years' time? It's all going to be led by tech. So I still think tech is the key underlying asset or sector for global stocks. But some of these stocks that have been highly leveraged to the AI trade are constantly being reassessed and are liable to pullbacks, and that's just the way it is. But overall, I still think broadly that tech is the key cornerstone asset for investors.
Okay, Neil, great to see you this morning. That's Neil Wilson, UK investor strategist over at Saxo. Thank you very much. Well, the EU and UK are reassessing the timing of a planned summit next month, as we say. This as key players on both sides of the channel wait for another change of leader in the UK. Andy Burnham, the man most likely to be Britain's next Prime Minister, has publicly backed much closer alignment with the EU and a desire to eventually rejoin the bloc. The political shifts come exactly 10 years after the UK voted to leave.
There are certain days that change the world. Brexit was one of those days.
British people will have the final say in an in-out referendum.
Watch out, here we go.
One story dominating the news today, and it is Brexit.
Brexit. But what has been one of the most divisive votes?
It was staggering.
History unfolding before our very eyes.
The population at large doesn't trust the establishment.
The bastion of independence.
Brexit changed the way that politics is done, not only in the UK, but beyond that too.
People want to take their country back.
Passions that are not unique to Britain.
Vote out NHS.
It was a real once-in-a-lifetime moment. But also sort of manifestly an act of economic self-harm.
Thing is, not everyone and their dog arrived at the polling station with an economics textbook in hand, or paw.
It was not even the main thing that mattered to a lot of people who voted to leave.
A cosmopolitan elite had been trying to redefine Britain as a multicultural, multiracial, multi-ethnic society. And the Brexiteers said, no, we are a particular people, a product of a particular history, with a particular set of roots.
We need our country back.
And so on the 23rd of June 2016, more than 33 million people cast ballots on a relationship that had shaped Britain's laws, trade and politics for almost half a century.
Yes is now showing at 67%.
The British people have spoken, and the answer is we're out.
By a margin of 52 to 48, they said Britain should exit the European Union.
Huzzah! Independence Day!
It might have felt shocking, but it wasn't quite as surprising as I think a lot of people look back and say that it was.
But it was a political earthquake whose aftershocks were felt around the globe.
It shifted the world from a world which seemed to be getting ever closer, in which globalization was the dominant theme, into a world that was becoming ever more fragmented. Brexit has ushered in a decade which has left Britain, Europe, the West in a worse shape than it started it. The issue is, would it have done much better without it?
And it is possible to work that out. To understand what happened, we can compare it with a model of what didn't. This is that story. Why Brexit emerged, what it cost, and what might come next.
And you can watch the full cut on the video hub at bloomberg.com/videos. Do also join me for a live Q&A today on the question, are the UK and Europe finally getting over Brexit? I'm going to be joined by Bloomberg's Brussels Bureau Chief Suzanne Lynch and UK reporters Joe Mays and Phil Aldrich. So to everyone to listen in, terminal subscribers and digital subscribers can send in questions to us all for answering in real time. So don't miss that at 2 p.m. London time. Well, coming up on Daybreak Europe, new car registrations continue to grow in Europe, but how much will rising inflation impact the market? We'll break down the numbers for you next. This is Bloomberg. European car sales grew for a fourth straight month in May. Let's get some analysis with our Bloomberg Autos and Aviation reporter, Danny Lee. Danny, just run through the numbers for us.
Hey, Lizzie, good morning. So sales for May up to 1.15 million units. That's the number of new car registrations across Europe and the UK, which really shows still some momentum, although a slower momentum over previous months, that consumers are still buying, particularly EVs and hybrids, as the high fuel price is seeing consumers balk and look at alternatives overall. However, we did see a slowdown, and that really is being driven by higher inflation overall, and that higher inflation is kind of creeping into concerns around consumer sentiment. And obviously, of course, we saw the ECB hike rates for the first time since 2023, really also affecting things. But when you look at the manufacturers, everyone, all the manufacturers, the European manufacturers, all did see various levels of performance, but it's the Chinese manufacturers who really saw outsized gains, continue to see outsized gains, and that's really putting pressure on the European automakers, the legacy automakers overall, and that really does shine through in the results. But as we have heard from the likes of BMW overall, they are concerned about the overall sales performance and the consumer sentiment, which is why they put out a warning of their future results. So yeah, it's a bit of a mixed picture, but clearly the Chinese are leading the way here.
OK, those numbers out earlier on this morning. Danny, thank you so much for running us through them. Now, let's turn to our big take of the day. Weight loss drugs have turned the 150-year-old drug company, Eli Lilly, into a $1 trillion pharmaceutical giant. Today's big take explores how Chief Executive Dave Ricks needs to prove that boom now can last. And I'm joined by Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence. So the big question, Sam, is you've had this boom and bust cycle in pharma, but can Ricks defeat it?
Yeah, that's a tough one. Pharma companies, there have been examples of pharma companies where they've tried to do that. A lot of the times what happens, if you take all the way back to Pfizer with Lipitor was the blockbuster of the time. Then the next blockbuster of the time was AbbVie's Humira. Pfizer had a tougher time managing it because you really have to kind of think about in 5 or 10 years' time, this drug will eventually become generic. How am I going to refill that bucket of cash? I'm going to have new drugs or stay in the same business and make better drugs and make sure that they all come online at the right sort of time when I'm trying to manage that dip, right? So get rid of the bust. And if you think about that, you can't legislate for it. You can try your best. I mean, honestly, I don't think anybody expected tirzepatide, Mounjaro, to be the drug that it is, because the mechanism that they used in it isn't supposed to work the way that at least at the time, was a bit surprising. So biology always throws up little hurdles for you. They are doing quite a lot of M&A, as you've seen. They've done a lot of work in there. They've got follow-up drugs in obesity, which are looking strong. So can they? I mean, they're definitely trying their absolute best, and they have the cash flow to do it, right?
You and I were just talking about how ubiquitous these weight loss drugs have become. Is Eli Lilly going to be able to sustain its GLP-1 dominance, though?
Currently looking at the data sets that we see, comparing the efficacy of these drugs, remember, it's not just about efficacy. We were just talking offset about the needle size and the issues, thinking about if you're taking an oral drug, do you need to manage your breakfast timing, etc. Those also come into play. It's not just about efficacy. Does a person know if they've lost 15% or 18% of their body weight? When you're starting from 90 kilo, you look good after that. You look fit. Your health is benefiting from it anyway, whether it's 15 or 18. So if you put that aside and just think about efficacy, Lilly's drugs seem to be on the more efficacious side in the way that they've been trying combining molecules like tirzepatide is 2 actives, retatrutide is 3 actives, and these seem to be giving them that efficacy edge.
OK, great story on the terminal. It's our big take, as I say, today, available on the terminal and Bloomberg.com. Sam Fazeli from Bloomberg Intelligence, thanks for bringing it to us. Well, plenty more coming up still on the programme, so don't go anywhere. This is Bloomberg.
people are obsessed with the Fed, whether it's 50 basis points higher, whether it's right now. What's the difference? The key story is tech boom, and that's going to be the most important first-order impact of anything else.
Nouriel Roubini from Roubini Macro Associates on the importance of the tech story for markets. And that takes us to our first terminal chart here that I want to flag for you, because it's indeed hard to overstate just how big that US equity tech trade is in the US. Micron trading $62 billion yesterday. So that is almost twice the Kospi's entire turnover. It's 12 times the FTSE 100. And this is a one-way street. You can see the two lines here. You've got a one-way street of flow from hyperscalers to semiconductors, a massive bet that there's going to be demand for frontier AI. Now, flip the board over because, of course, not sorry, Dr. Doom, we do obsess over the Fed here on Bloomberg TV, and for good reason, because independence remains a key market theme. As you can see here, long end yields still sensitive to any challenge to Fed credibility, and the spotlight is still on Fed credibility because we've got that legal fight around Fed Governor Lisa Cook, so that keeps the spotlight there. Just finally, one more term chart to show you. It is on the euro this morning because, speaking of central banks, you've got the euro floating around this 114 level, but vulnerable to a break as the ECB's long-running hawkish tone does run its course. So maybe that's a good thing for luxury and for car exports here in Europe, as we were discussing with Danny Lee. I just want to also check in on these markets before we go, because we've seen some outsized moves on the Kospi this morning. Take a look at where we are right now, down more than 8% because of the tech sell-off. And we're seeing losses expected both here in Europe and for Nasdaq futures as well later in the day, down 1.7% there as we head towards the Wall Street Open. The opening trade's coming up next. Anna, Guy and Tom will take you all the way to the European cash session. That does it for Daybreak Europe. This is Bloomberg.